we have all these legacy issues we're dealing with, our collective memory of commodities, our collective memories of super cycles, and you say, wait a minute, it's a split super cycle upon us. What do you mean by that?
Well, Tom, thank you for having me. I think there's sector of metals and materials which is clearly in a super cyclical upswing, and we're seeing record prices, and we'll continue to see record prices for a lot of the raw materials there. But when it comes to energy, we are not, and in fact, I doubt we're going to see record prices in this cycle. I think we're just seeing cyclical upside swings across the board. Although, as you pointed out, we're down today on oil. But really, the story is that when it comes to materials like timber, we are now at a point where supply is extremely low, inventories are extremely low, and demand is roaring. So prices are extraordinarily volatile. Copper is heading in that direction, with inventories declining quickly and also moving into demand rationing. While as oil primarily is still very well supplied. OPEC is holding back capacity, so we are still trying to figure out what to do with all those spare barrels.
Can you put some numbers on this for us then, Francisco, this split super cycle? Let's deal with the metal side of it. Copper right now is at 10.5, on 11K watch now, seemingly. What are you looking for through the next 6 months, 12 months?
So for copper, we're looking at basically $13,000 per ton, and we think we could go as high as $20,000 per ton if the supply of scrap copper doesn't make it into the market.
Whoa. You just said you're modeling a double off of LME copper?
Our official target is 13,000, okay? But we see a case over the next couple of years, if we do not get enough scrap metal coming into the copper market, because remember, a large chunk of the copper market, about a quarter of it, is scrap, right? So if we cannot scrap enough copper recycle it back into the market, I'm talking about the copper that we get from past uses, not the copper that we are mining, the copper ores. Those are very tight, so we need to keep pushing prices higher also to create more supply, and that's the crazy dynamic that's going on in copper right now. Remember, copper is critical to all the applications that we have lining up for the decarbonization of transportation, the decarbonization of industry, and the decarbonization of the electricity sector. So all of those require a lot of copper.
Francisco, I've got to jump in because we've got to go through these numbers a little bit more. We've got 13K as your base case. We've got 20K as this big bull case. Can you help us understand how big a force recycling of copper actually is in the copper market, and whether you expect that to actually materialize?
Right. So it's about a quarter. I mean, it's hard to tell at this point. Remember, there's a lot of different uses that go into recycling here, and it's possible that it happens. I do think that copper is probably the most constructive commodity out there from a metals perspective, but there are others, right? I mean, remember, we are at the stage where, as I said before, we just printed way too much money. And we never quite had a recession when it comes to goods and when it comes to the demand for stuff and when it comes to demand for industry. We barely had an IP recession last year. So all of this is really booming from a metals perspective, and copper ores are actually degrading quite a bit. So if you look at the supply of ores is declining across Chile and Peru. We have elections as well in Peru coming up, right, where there is potential fears of sector nationalization. And this is also the kind of behavior that you start to get when prices get out of control and governments suddenly see a lot of money in this commodity market, the small commodity markets.
Francisco, our collective memory quickly here is that we had a China boom up to 2008. Do we have a China boom again, or is demand coming from a different theme?
Well, the interesting thing in this cycle is the demand is coming really from everywhere. I mean, for sure, we're seeing strong demand from China. But also, we are seeing a very robust consumer activity in the U.S. You talk often to Michelle Meyer, our head U.S. economist, and she can tell you how strong demand has been here. And part of it is just we've given people a lot of money to play with while they were sitting at home. And also European demands actually picked up quite a bit. And while this is going on, by the way, Tom, I mean, I'm sure you've noticed European carbon prices have reached 50 euros a ton or $60 a ton, which effectively means that there's going to be even more demand for this copper and for some of these metals that are going to help us decarbonize. Because it's so expensive now to burn carbon fuels in the European Union. So there's a lot of things going on simultaneously, really, supporting the complex.
We've got a minute left, and I want to use that by talking to you. Just one more question, Francisco. This big call on copper, is this a cyclical call or a structural secular call, this shift away from the fossil fuels and towards batteries, etc.? What is it predominantly?
It's predominantly the latter. It's a secular call. It should play out over a number of years. We think at the end of the day, the initial impulse came from monetary and fiscal. The secondary impulse came from this kind of China taking center stage in terms of growth last year, and now we're getting the U.S. infrastructure and decarbonization impulse. And that's going to take about 10 years plus to complete. So it's a secular story which will continue. It may even slow down decarbonization efforts.
Interesting.
I guess that's a risk, actually, that we end up slowing down decarbonization efforts because we just don't have the materials lined up for it.